So getting the right structure for your business is probably one of the most important things. It's a fundamental building block, essentially. When it comes to building your business, it's much like a house. At the end of the day, getting the right structure from the get-go is like having good solid foundations. If you skip this step and basically don't put any thought into it, don't basically put much awareness, you just follow the herd, you go for a limited company, but it might not be the best thing to you, you are not doing yourself any favours. Overall, your house is going to be weak, your business is going to be weak, you're probably paying too much in tax. In today's YouTube video, I'm going to run through some of the factors you need to be aware of when it comes to getting the right business structure for your business. So make sure that you've watched till the end, because we've got plenty of pointers in terms of practical guidance when it comes to setting up your business and making sure you've got the best structure. For everybody who's watching this video, please make sure you do give us a big like, and also you hit the subscribe button with notifications turned on. We're posting videos 3 times a week. It's usually about 7 o'clock each day, Monday, Wednesday, Friday. So make sure you're subscribed so you get notified as soon as we post more fantastic tax saving content. So the first thing I'd suggest doing really is considering where you're at now. So if you've got properties at the moment, you've got other businesses, analyze this, your current income position. So if you're employed, are you looking to stay in employment? If you've got your own business, are you looking to stay where you are, basically, in terms of your other income streams? Because from a tax point of view, if you look to live off your buy-to-let income, live off your business income, we need to be aware of this, and you need to basically be aware of this so that you're looking at how much income you're taking out. With the rates with the increases for corporation tax coming in as well, limited companies are less favourable now, especially where the business owners are pulling out all of the money. In those cases, being in a partnership or in your limited liability partnership with your own name might actually give you a better tax outcome. Of course, this isn't true for businesses that are property businesses, because of the Section 24 finance costs being restricted, which means that your mortgage interest is disallowed. When that comes into play, a limited company is still better. So definitely consider kind of where you're at now, and then the next thing to look into is where do you want to get to? Have clear goals, a business plan if possible. You can get templates online. Basically make a business plan for your property business. Look what you're looking to achieve, do revenue projections, see what income you want to be taking, so you've got all of this and you can do the calculations. Because when it comes to taxes, yeah, you can plan ahead, but a lot of it is pure number crunching. We need to look at what income you've got currently. Is that going to stay the same? Is that going to increase? Can you make pension contributions? All of these kind of factors. And it basically looking at what the tax forecast is going to be over the next 5, 10, 15 years, depending on the rates. This is all part of what happens when we as tax advisors analyse this for our clients and make recommendations on the best tax structure. So once you know where you want to get to, consider your exit as well. So a lot of business owners don't think about this, they just want to build their business up and then they don't know what they're going to do with it. But if you are looking to sell your business, look at what the end is. Start with the end in mind. If you're going to just buy one property and that's it, then that's going to have a massive impact on whether you buy a limited company or your own name. Accountancy fees for a limited company can easily be £1,000, if not more, depending on the firm and kind of what level of service you're getting. But if you've just got one buy-to-let in a hole, that's going to completely be wiped out. So you don't really want to be in a limited company. But if you're going to have one property now, and then next year you're going to get some of your pension's going to come through, and you're going to look to basically use that to buy 10 properties in 1 year. You need to know this. So you think, okay, yeah, we're going to take the hit in year 1, but then in year 2, it's going to be worthwhile because we've done these tax savings. This is something you need to be aware of, and look where you wanted to get to, and then look what you're going to do once you're there. So when you've got this company at the end, are you going to pass it down to your children? Are you going to sell it, wind it up, move abroad? You need to be aware of this, because each of those have massive tax consequences. If you're looking at getting your children involved, is there a trust structure in place? Do you have different share classes, freezer shares, growth shares? All of these kind of fantastic tax savings tips. Or if you are looking at moving overseas, how are you doing that? What country are you going to? What's the tax treaties? Then it might be worthwhile doing a share sale or winding the company up beforehand. These are all the things that you need to be aware of, because each has a massive tax consequence. So really it comes down to doing the maths, reviewing the options. Essentially, for most people, it's either going to be as a sole trader for a limited company. If you've got a partnership, then it'd be a partnership, a limited liability partnership, or a limited company. So it's about doing the maths, looking at what income you're going to take, what you're going to reinvest, doing the calculations to see where you want to get to. It can be quite difficult because you've got loads of different personal allowances, reliefs, if you're looking to sell properties, maximising your expenditure. All of this is going to come into it. So it's probably best to get an accountant to actually crunch numbers for you. But obviously this video is massively beneficial when it comes to helping you understand what goes into the factors. But also, what we've not been able to show here is that we've recently launched a brand new course. It's online videos that you go through at your own pace, and it's all about how to structure your business. So we've got tons of information in there with detailed videos running through some other factors, and not more than we can show in a YouTube video. You know, these are a couple of minutes long. This was around an hour's worth of content that we've gone through in detail, curated this, and it's aimed to give you as much information to help you make up your mind on the best structure to go to. Not everybody can basically afford, or they basically can't opt for professional advice at the get-go. That's fine. Starting your business is a struggle. You need to maximize the money you're saving at the end of the day, keep your costs as low as possible. I understand that. So one way to do this is to take advantage of the offer that we've got on, £17 until Friday. The link is in the bio. It's bit.ly/structure17, and what this is going to get you access to is access to this course on how to structure your business for just £17. Usually this would be way in excess of £100, but we're bringing back TaxFlix. We're going through a big relaunch, and as a result we've done this offer for just £17 to mark this fantastic occasion. So if you've got any questions on this, feel free to drop them in the comments below, or my personal email is joshua@jsmpartners.co.uk. I would love to help you guys. Any questions around this, any questions around the course, please do hit me up. Otherwise, guys, please make sure you do give this video a big thumbs up, as it really does help me, and also make sure you're subscribed. Bye for now.